The headline that just broke from Bloomberg is that the U.S. is now considering restricting capital inflows into China through U.S. pension funds. Joining me on the phone is Sean Donnan, Bloomberg senior trade reporter. Walk us behind some of this news.
Well, as you know, we reported more than a week ago that the U.S. was examining cracking down on financial flows to China. A lot of people focused then on one of the options that the White House was considering, and that was delisting Chinese companies here in the United States. We've been told that the conversation has since moved on. Delisting, as we've heard from a number of senior officials, is off the table, but what is very much on the table is finding a way to restrict, in particular, the ability of government pension funds to invest in Chinese companies. A lot of people in the White House concerned about MSCI's decision earlier this year to increase China's weighting on its emerging market indices and the implications that has for American capital, for American investors. The White House is portraying this as a move to protect American investors from potential financial frauds in China. Stay tuned. This is a conversation that is going on.
Yeah, and Sean, and this isn't just what's happening in the White House. I mean, we've heard, senators come out against this, right? And Marco Rubio sort of front and center on this. This has some broader support.
Absolutely. Marco Rubio in the Senate is leading a push for a bill that would require Chinese companies listed in the U.S. to abide by U.S. auditing standards. And there's a funny quirk right now in the system whereby a lot of Chinese companies don't cooperate with the PCAOB, which oversees auditing. That's a creation of that came after the Enron scandal, meant to clean up the auditing business. And a lot of Chinese companies listed here in the U.S. don't abide by those same standards. Marco Rubio pointing out that is a risk for American investors, and the White House seems to be taking his line.